Hi, this is Kerry Artak with Wicked Stocks, bringing you the daily Tesla report for Thursday, April 11th, 2024. Let's take a look at the charts. We'll start with the big picture. This is a weekly chart that goes back several years, but I'm really highlighting this channel structure we've been trading inside of now for 6, 8, 9 months, something like that. It stems off the July high of last year. We tested the top of it in late December, fell away at the time. We tested the 239.21 channel top. I'd mentioned how the channel base, presently at 159.91, should be considered reachable within 3 to 5 months. And about 2 months later, we did test it. We've been plodding along this 159.91 formation. This is still bottom picking territory, not only on a day trade and a weekly basis, 3 to 5 week swing trade basis, but also a 3 to 5 month near term investor basis. Holding above 159.91 will keep 239.21 in reach over the next 3 to 5 months. On the way up, we have a pretty clear buy signal, a pretty clear indication for reaching 239.21, and that would come with a settlement at the end of the week above 184.25 to 188.84, and that's not going to happen tomorrow, I don't think. I think we're quite a distance from it. But I do consider this still a 2 to 3 week target. Above 159.91, this channel bottom, 2 to 3 week objective still in the mid to upper 180s. 189.71 is the same formation on the daily chart. Actually, this is not an updated chart, but the daily chart, this 190.24 should be 189.71 FYI, and this 160.82 should be 160.51. These are updated, and this shows that long-term channel bottom on the daily chart at 160.51, above which, having tested it most recently 4 trading days ago, will keep over the next 2 to 3 weeks or sooner the 184.25 to 189.71 region. If you're long the market, if you got long the market recently and you're holding out for 184.25 to 189.71, this is an area where you can take profits, exit that long position. If your time horizon is typically 2 to 3 week swing trading, you could also set a short in that mid to upper 180s, anticipating then bearish rotation perhaps back to long-term support at 160.51. And that is the 2 to 3 week dynamic. Now for the day itself, we still have this channel top that we opened back below on Wednesday. It held 173.54. This is our intraday resistance, and I can't help but see that as long as we're not able to get above 173.54 today, selling pressures can build. I don't expect to see 160.51 today. All the minor points to the downside have been carefully chosen. They're well suited for day traders, but just know that you can pick whatever spot. So, if you sell 173.54, taking profits, I think any of these minor points on the way down is a valid level. You could even scale out of a short position by buying some back at 69.08, 67.66, so forth and so on. But if we were to test today 160.51, it does represent the start of a meaningful range of long-term support down to 159.91 that can absorb selling not only through the rest of April, but even into the third quarter. Now, if we close tomorrow, the week itself, below 159.91. And yes, if you recall, about 5 weeks ago, we did close below this structure by a hair, and it did satisfy the 1% violation threshold that I like to employ for any line study that is 6 months and longer. But I think simply put, if we close tomorrow, Friday, the week itself, below 159.91, that would obviously also be below the 160.51 double bottom that now exists. And under that scenario, closing the week below 159.91, I do think you can set up a 2 to 3 month trade down to 101.81. So bottom line, if we close below 159.91 at the end of the week, any long position should be liquidated, because the next 2 to 3 months would anticipate 101.81, that January 23 low. On the way down, we do have decent support at 137.27. That would be a 2 to 3, 3 to 5 week target. But over the next 2 to 3 months, 101.81 would be expected if we close the week tomorrow below 159.91. Until then, this market actually remains stable as we move into the third quarter, stable to potentially bullish into the third quarter, because we are at the base of a longer-term channel bottom, and the channel top that is presently at 239.21 and dropping remains a 3 to 5 month reality, and make that a probability if we can close any week above this narrowing range of resistance that is presently in the mid to upper 180s. Now let's talk upside again today, that if we do close today above 173.54, I see that as a sign of strength as we move through the rest of the week and into early next. Within 2 to 3 days, I would anticipate 184.25. But I'm going to keep it as an intraday level here rather than a session containment level. I mean, if you want to treat it as a session containment level, able to contain daily buying pressures, be my guest. I just want to keep it as an intraday pivot point, below which, yes, we could over the next few days fall back into the very low 160s long-term support. And if we close today above 173.54, expect 184.25 within 2 to 3 days, the beginning of a narrowing zone of meaningful near to even mid-term resistance up to 189.71 that can absorb buying into possibly through May trade. From here, we can fall away. And if we can close above 189.71 on a daily basis, that would pivot the market. That's the wrong chart again. That would pivot the market north into the third quarter. So you can buy on weakness at 159.91. It'll give you obviously a better price point to buy into, but your odds in terms of reaching 239.21 are greatly enhanced if you buy following a settlement above 188.84, which would obviously be on strength. And I think that pretty much rounds it out. There's nothing else for me to say, so I'm going to leave it at that. Please click like, share, subscribe, and check out wickedstocks.com. I'll leave it at that for Thursday's Daily Tesla Report. You have a great day.